Welcome to G3 Investors, where we trade ETFs using a systematic trading model to make money in any market and to always minimize losses. This is part one of two videos this week in which we do our normal review of the market. In part two, we're going to go into how G3 works and how we look at the market and just more details on schedules and so forth. The Nasdaq bounced 3.3% for week 29. The week ended July 22nd, and the S&P 500 went up 2.5%, and the Russell 2000 gained 3.6%. So it was a decent week for the market, a good bounce. Now you can see our model. Well, it doesn't show what we did for the week, but for the week we were up 5.2%, and we're up 7.5% month to date and 93% year to date. And our market continues to crush our benchmark comparisons on a year-to-date basis. We're beating the S&P 500 by 110 percentage points. We're beating the Nasdaq by 117.5 percentage points. For the month, we have outstripped the Nasdaq by 2.8%, and I would call it break even against the Nasdaq. So we continue to crush the market. If you're interested in following us on the YouTube channel, highlight this green link and be sure and smash that like button. Like, share, and subscribe on YouTube. That helps us out a lot. If you want to become a G3 patron, just take the yellow highlighted link and use it. It only costs $20 a month, so it's not like it's a lot. A meal and a beer. All right, now we're looking at the 5-year chart of the Nasdaq Composite Index, and we can see from this chart that we've bounced off the bottom here, but we are still in bear market territory. And it's a nice test so far, but next week we've got a Fed meeting coming up, so it'll be interesting to see how that all pans out. Now we use the QQQ to trade that ETF, the Nasdaq 100 Trust, and so that's what we trade with. Now from now on, let's see, this is a 6-month chart of the QQQ, and if you look, it bounced off of its bottom, and it's still in a sideways consolidation. So we got a lot of work to do, but there are 6, looking at the strength, there are 6 ETFs. There were 16 that actually bounced off their bottom, but 6 of them, I call them strong movers. The first one I want to look at is the semiconductor index, and you can see here that it moved above this last high here as it moved out this week, but it stalled on Friday, as did everything, because the market was down on Friday. XLK, that is the technology select sector. And again, all these one I'm talking about, we made money, like on the Nasdaq, or I mean the S&P 5 or the semiconductor index, we made like $1,600 on a trade. Here we made $900, but it's a similar look to the semiconductors, only we didn't quite make as much money. XLY, and that will be the consumer, the discretionary point. Again, it took off the bottom, but it still hasn't reached this peak up here, but it took off the bottom. And again, we made $1,600 on that one. Home builders was also pretty strong. Nice move. But again, we're still stuck in this consolidation, and we made $1,400 on that one. this week. The JK is the mid-cap 400 growth ETF. Not as big a move. I only made 1,000 on that one, but we got above this part of the consolidation, and we're starting to form this W formation for those who are technically minded people. And the star of the week, last but not least, surprises the heck out of me, is the natural gas fund, the United States natural gas fund, which is basically gas prices. And this is a tremendous move off this bottom here. And this thing is a strong ETF. I mean, it's trading above its 200-day and above its 50-day moving average. So it's, in my opinion, it's the strongest ETF that we follow. I'm not saying it's the strongest one out there, but it's the strongest one that we follow. Now, there are a couple more ETFs that are trading above their 200-day moving average, but they're not. They didn't move out this week. And there's the Energy Select, so that's the big energy companies, Mobil and Chevron and so forth. And it's just moving sideways, but it is barely staying above its 200-day moving average, which is the red line there. And last but not least is USO, which is the oil prices, the oil and gas fund. But again, it didn't make the move like I mean, we made a little bit of money on this bump up here, but it was negligible, and then it just faded as the week went on. But so there's not much to talk about there on that one. And last but not least, let's look at a heat map so we can see where this market gained its money this week. And it was Amazon, Tesla, Apple, so the big glams, excluding Google, telecom services, healthcare didn't do so hot. The big banks and the financial services, credit services did pretty good. And again, here's the energy companies. So that's it for this week's video, part 1. In part 2, we will go into more detail on how we do what we do. This is Greg Gallagher, wishing you good trading and good luck.